Good evening, everyone, and who are online and watching this live. This is yet again Enterprise Wednesday. We bring you Enterprise Wednesday uh, as part of the entrepreneurship movement on campus at APU. Together with me this evening is the wonderful Miss Visal, who will be my
Hello.
co-moderator. And for those who are getting confused, yes, I do not look like Prof. Angelina, even though it was broadcasted as her. I only have the similar smile. Maybe that's all. That's the only thing we have in common. Uh,
Absolutely, Prof.
we have a wonderful guest. Welcome, Mr. Terence Chia, to Enterprise Wednesday, and you have a wonderful topic today. As its title, "How Startups Successfully Ruin Their Capital Raising Campaign." So for the next 1 hour, you're going to sort of enlighten us and enlighten all the young startups that we have on campus and whoever's watching as well on uh, on the bits and pieces and the key areas uh, in which startups actually ruin all their capital in terms of the campaign and the stress and all the work that they put in. But before that, Terence, I want to give a short intro of yourself. So, Mr. Terence is a partner in Chataya Ventures. He's also
Has done a very good introduction of myself. Just mention a little bit about Project Diana. Basically, is a non-profit initiative that we want to help women scientists across APEC to have a career options or making a career transition into deep tech venture investing. Transition over to the venture capital industry across APEC. So basically, today's discussion, we are going to quickly touch about introducing you what is venture capital in a nutshell. Maybe spend 5-10 minutes on that and the purpose of venture funding before we dive into what are the common mistakes along the fundraising campaign. So venture capital, what is venture capital? So by definition, or you probably see on Wikipedia, well, basically venture capital is capital invested in project that has a substantial elements of risk, typically a new expanding business. So that's why you probably heard that venture capital is a very high risk yet very high return business. The high risk is true. The high return is half true, and the other half is the myth. But I'm not going to discuss that today. So that's by definition in terms of textbook. Right? How really venture fund works is venture funds, we raise funds as well. So but the terms that we use for the investors that invest into a funds is actually called LP or limited partners. So basically, fund managers like myself, we gather the money from our investors, who is what we call limited partners, number of them, and we form an entity called venture funds, which needs to be licensed by whichever jurisdiction they are operating in. Then we investing in the startups that we invested, we investigated, and we evaluated in terms of their potential, the founding team capability, the market, so on and so forth, so that we can.
What is the most challenging aspect of developing successful crowdfunding campaigns? Second question, what risks are associated with sourcing raw material or keeping service cost in check?
Well, I'll try to answer, although these two questions are not really related to the topic we're discussing today. But what the most challenging aspect of delivering a successful crowdfunding campaign, to be honest, I've never done that before. But again, some of the key factors about any capital raising campaign is whether your team is ready, you have the capability to execute whatever plan that you put up. We did decline such a deal when everything is in place. We check every factors, but we think the team do not have the capability to execute whatever plans that they have put up. That's why we decline. So Then the second thing is probably like if, as I mentioned multiple times just now, you have proven you have already pipeline of customers already in the pipeline, and you are just asking for money to deliver your a contract. Yeah, then is the best time to have a successful crowdfunding